Holy moly. All right. So it's week 13. This is Outlook number one. We've got some crazy price action that happened today. Boy, they're on a roll right now in the political space. All right, let's start with Great British Pound futures. So, zooming back out to the daily to start it off today. I explained the last outlook that I was expecting price action to move lower. It started doing that. And then, well, to open the day, I guess moving into 7 a.m. Eastern this morning, we got a very crazy just impulse, essentially, that led to the bullish candle closing here. And effectively, clearing this liquidity draw, clearing this liquidity point, clearing this withdrawal. So all that being said, even though this price action is still crazy, pay attention to the fact that we still have not cleared the high of this price leg. So even though we have this crazy impulse, this is still respecting our price leg ever so slightly. And so even though we have another run higher, deeper into effectively the premium side of this price leg, this seems to me like another draw on liquidity. And so looking at that from the 4 hour perspective, it's basically that, right? Where we have a draw on liquidity from this high, and then we generated this high that led to the run here. And then after that run there, we then ran this high yet again. So we have two draws on liquidity, and now we are effectively just ranging inside of this market. I was expecting actually price to mitigate this price gap, which it did, but not fail. And it absolutely just got blasted, which led to a run on uh, this high here. So the dominating play right now is a structural action, which is liquidity draw. So if we are still looking to continue, which we are, the bias of bearish price action, we need to look for plays based off of the liquidity draw here to continue lower. So as of right now, this is just another FU basically impulse play on the markets. This is the price action right now. So we have the high of the price leg, the low of the price leg, and then we have the high here of the liquidity draw, and then we have a low here, and then we ran this high and we created another high. So now we're looking for price action to continue lower from here. It's unlikely that price will continue higher, but we're yet to see. So another thing is I'm actually going to give a little bit more insight by zooming all the way out and showing you not only that this is a very, very sensitive area from the macro perspective based on looking at the daily time frame and the 4 hour time frame, but when we zoom out to the monthly, and this is going to be a very rare situation that I zoom out here like this, what you'll see and what I identified as the structural point, I never marked out the monthly as this, right? This was the high that we mitigated that sparked the price action that we're seeing right now. Then I said that this low here is the ultimate low that I'm looking for to target. This is all based off the daily time frame. The other structural points that we were looking at to target were in this area right here inside of this green box. The area that we are mitigating right now, and that was a part and that we're responding from, which was very crazy, is in this price gap, this 1 month area of interest here. And so effectively, if we zoom out a little bit, what we have here is we have a low that led to a high. We had a pullback that mitigated this price gap here. This is balanced here. And then that led to the run to take out this liquidity point here. And so because we ran to take out that liquidity point here, or really I should say structural point, this led to a monthly perspective liquidity draw, as you can see, where after we ran the high, this generated the high, and now we're moving lower. And so a little bit more analysis on this. Another reason why I'm very, very bearish on GU right now, looking at it from the monthly perspective, is if we look at the momentum of the candles starting from this high moving down versus the price action moving here. All of this price action was generated to return to mitigate or liquidate or purge the orders at this high here. The real move was from this high down to this low. And so what I'm expecting based off of analysis of this price action here is the failure to continue higher, where this entire month here was essentially to come back and balance this price gap here. And what I'm expecting is for price to fail to run higher, to fail bullish price action after mitigating this price gap, and that should be the price action that sends us lower. And so if I was looking at it from the monthly perspective, as if I was choosing targets from the monthly perspective, the same way I choose targets on the daily, we can see that the monthly target would be here. That's the initial target. And then the secondary target is, even though I have my daily target marked up here, the monthly target is actually this low. And it's really, I mean, effectively, it's these two lows here, which are relatively equal lows, but it's those two lows here. And that's like the ultimate, well, I shouldn't say the ultimate, but one of the major monthly targets. The ultimate target would be the low of this price leg. So if we're looking at a monthly price leg from this range of data, we have this high down to this low, then we ran back here to uh, basically solidify the price leg, and now we pulled back and mitigating this liquidity point, which is basically the last high aside from the structural point inside of this price leg, and now we've mitigated that. So what we should be looking for, if this is going to continue lower, is the response from this being a liquidity draw to send us lower. And so we are on the premium side of this monthly price leg, and so everything is pretty much balanced here. I mean, literally everything is balanced inside of this range. So we are in an extremely sensitive area where this GU is about to pop or it's about to drop. Those are like based off of just the range mechanics or the price leg mechanics. Everything from here down to here has now been completely balanced. Everything moving up towards this target kept itself balanced as we moved towards it, and then it generated level liquidity as we moved higher. You can see that there's really no inefficient pricing left other than at the lows of these liquidity points. That's it. And so if this is going to continue with the bearish price action based off the monthly price leg that's been generated, this will now be looking to continue lower. And then we resolve this down to the daily based off of the daily price action. And so this response here is that high, and that's where we began our analysis effectively showing that, hey, we're looking for bearish price action to continue. We got that, and we took out this daily structural point here, and then we mitigated this price gap here, and then now we got this major response here, and this is a very sensitive area. This is a very defensible area from not only the daily perspective, from the macro perspective, but from the monthly macro perspective. And so based on what happens in this area, if we break this, we have to assess to see if it's a break of structure or a liquidity draw. But based off of what happens in this area right here, this is a lot of liquidity that is being there's a lot of orders battling right now in this area. And so if the price continues to hold based off the bearish bias, we should be expecting free fall here pretty soon. If not, then we're going to get well-structured price action to move higher to start liquidating some of these highs here. And if we, pull back into a pool that shows even more strength for sells, then that's when we'll get like an even, more impulsive bearish move. But as of right now, this this little price leg here on the daily is holding. Even though we got this FU impulse, we still got another draw in liquidity. And so going back down to our 4-hour time frame, this is what the price action is looking like. I'm expecting or anticipating price to continue or to roll over once again and start moving lower. If it does take the high, that's the counter analysis, and we'll have to assess the price action once it reaches that. It's still going to be the same thing is, hey, we assess the structural action. Is it a price or a liquidity draw, or is it a break of structure? If it's a break of structure, cool. Then we start looking to see where price is going to move higher. And if this liquidity draw holds, then obviously we're going to be rolling lower. This entire price leg is completely balanced in my eyes. The only price gap that exists is here, and that straddles both very evenly the discount and premium side. So it's not really relevant to me. What would be relevant is something on lower time frames to look for possible entries to continue lower. All right, so that was a very in-depth outlook for GU. Similar concept on everything else, but on gold, just like I told everyone, in the outlooks before, we were not going to continue higher. We are in a range. I detailed out the range, broke it down. Go back and watch the videos on the gold outlook, watch the outlooks to see the perspective on gold. But I told you guys that we were going to roll over, and that's exactly what we did. I said we were going to start targeting these liquidity points inside of the range. We actually went even lower and effectively almost ran, basically generated level liquidity or equal lows with this low here. I don't know of any. I honestly think this range might break. There's nothing left on this discount side of the range to keep it from going higher, or to keep it from going lower. Everything is balanced now. Everything is mitigated. The only uh, option for continuation of price action higher would be a liquidity draw based off of this liquidity point here. That is the only thing that I can see that would lead me to believe that price would begin moving higher again. But even if it moves higher, all we're going to be doing is pulling back into the premium to fill possibly if there is inefficiency inside of this area. But as of right now, I just don't see gold continuing higher at the moment. I just don't see gold continuing higher short term. I see it actually breaking this range, anticipation of breaking this range, but we'll need to. This is a range, so we have to yield to the price action inside the range. But I'm still sitting on the sidelines here for gold. Um, in hindsight, if I would have seen this earlier, this looks like a possible play. That looked like the play to be that was right here. Yeah, it definitely was. That looked like it was the play, but like I said, I was not. I didn't want to trade gold at the moment. I'll just assess the price action and look what happens based off of that. And even then, this is on the daily, so on the 4 hour, it was just 100% mitigation of this price gap, effectively 100% mitigation. So that's what that sparked this entire price action moving lower. But I was not confident in trading this at the time. So yeah, just chop it up, leave it up to that. But from the 4 hour perspective, you can see that, yeah, like I said, we led to clearing out these lows and very well structured price action as we move lower. So yeah, all right, moving on to the NASDAQ. All right, NASDAQ, once again, we called out a target, we met that target, and then side like every other pair, we had an extremely high impulse, except for gold. Gold decided to drop. We had a very strong impulse to the high side, pulling back to actually mitigate. I believe it's 50% of this price gap. Yeah, so literally perfectly every single time. I can't stress this enough. These are so cool. Every single time mitigated 50% perfectly, and that was the target basically of this impulse after we and effectively generated. You can see that we mitigated this liquidity here, these basically this high, that high. We ran those two highs, and that was all to run up and mitigate this this inefficient pricing, or this price gap that led to the break of this low. And so once we broke that low, that's what led to price action continuing lower. Um, there was this price gap, but it's not really relevant, even though it did lead to the break of structure or the target. It did not fit the criteria for a valid price gap because it did not, mitigate any other type of liquidity. Whereas this liquidity draw here, this is what led to the mitigation um, of this low here, where this is completely balanced. Effectively, these three candles balance this candle, so all of this is pretty much balanced in my eyes, and then the only inefficiency that exists would be this price gap, and so that's what led to this. And then you can see we got the response here, and then we have the three candles forming or continuing lower. So not only that, we have effectively another, like, basically little high here, a low, a high, and then we ran lower, but we have a draw on liquidity plus the combination of action and mitigation, which is mitigation of this 50% of this area of interest. And so we should be looking for a price to continue the sell program and continue lower, with the next target being this target here, and then just absolutely, if I zoom out here to the daily, just continuing lower, right? I remember, I believe I told you guys we were in a range. I don't ever believe that I actually marked out the range on the Nasdaq. I know I did. I marked it out on the Dow Jones, but I did not mark out the range on the Nasdaq. Well, now's the time to show you. The range existing on the Nasdaq exists from the point that led to the break of previous all-time high, which is marked by this line here. So it's this low all the way up to the all-time high now. And so to give you a little bit of perspective, but not to scare you in relation to, macroeconomics, is we've effectively just crossed over into the discount side of the range. And then we pulled back ever so slightly into the premium side of the range to mitigate the last basically inefficient area inside the premium side of the range. And now we should be looking for targeting inefficient pricing inside of the discount side of the range and also liquidity points in the discount side of the range. So if there is any discount inefficient pricing, which I see, right here immediately, that's where we're heading. And so don't be surprised if price begins to roll over very, very heavily to start meeting these targets here. These are long overdue targets, and if this range breaks, we're going to be in free fall to start moving towards, well, really, I want to say macroly this low, but we'll start moving towards, other lows based off of the action if it's a breaker structure here. So right now, TLDR, we're inside of a bullish range. We cross over into the discount side. Everything on the premium side is completely balanced. And now, after this mitigation of this price gap here, we should be looking for price to continue rolling over and taking out sell side objectives, which are these discount liquidity points. All right. Now, moving on to the Dow Jones. All right. So, like I said before in the previous outlook, yet again, Dow Jones did exactly as everything else did. It pulled back after we cleared this. Sorry, we step back here. We mitigated and cleared the range on the Dow Jones as expected. I said we would be looking for mitigation of this, but there would be pretty much like we did get like a little bit of sensitivity to that area being mitigated, but after that, there was really nothing holding it here. And so we did get a very strong break of structure of our identified range. And so now what we should be looking at is a potential, or is now for price to just continue rolling over, starting to take out these sell side objectives because we broke out of the range. So now we are in a bearish market on the Dow Jones or the YM. And so now, after mitigation of this price gap here, and once again, everything is completely balanced. This is very well structured bearish price action. And we have now mitigated the last, price gap. Just even from the daily perspective, but on the 4 hour, we mitigated the last price gap that existed inside of this, essentially this area. And now what we should be looking for is roll over and start taking out these sell side objectives, which are these bullish liquidity points. So yeah, we got a lot of opportunities moving forward. Be careful, take advantage. Happy trading. Peace.